Hello everyone. So welcome to today's session on important differences in the first module in investment management. So today's session we'll be dealing with different important differences here. Okay, so let's go. Now the first thing to be noted here is this regarding the differences between investment and speculation. So investment and speculation, let us know what it is. The investment, if you see that is the picture here, the investment this man is having, he tries to invest some sort of money in different categories of portfolio. The first thing you can see, the first short ladder, where he has some sort of returns which he can do it for the short term. And the second one is the second ladder shows the medium term, and the third one shows long term. So now it is left to him to decide where he wants to invest his money. So this is what called investment. But if you see the concept of speculation in the above figure that's shown on the screen, here we have that first a man is having more amount of money. So he's going and buying gold or something like that. So on Monday, he's going and buying. And then later he wants to earn profit immediately. So he sells that gold and he makes lots of money on Wednesday. So this immediate action is called speculation. Now let's see what actually the difference between the investment and speculation is all about. So the first factor we can take is based on meaning. Investment is defined as the purchase of an asset with the hope of getting more returns, more moderate returns. And speculation is an act of conducting a risky financial transaction with the hope of getting substantial or adequate profit. If you see investment, the basis of decision making is based on the fundamental factors, which I said yesterday in the previous session, that is regarding EIC, economic, industry, and company specific factors. These are called fundamental factors, which really affects the performance of the company indeed. The speculation here is based on the hearsay or the rumors, the hunches, the technical charts, and market psychology. And if you see the next is investment, the time horizon is for the longer term, but in case of speculation is for the short term period. A risk, if you see in case of investment, is moderate risk with a moderate returns. But in case of speculation, you have high risk here. You may get low returns or high returns depending upon the situation. Intent to get the profit. If you see in case of investment, changes in the value, but in case of speculation, changes in the prices itself. Expected rate of return is moderate. It is in case of investment, but in case of speculation, you can expect higher rate of return. The funds, if you see in investment, it's based on the investor's funds, which he's trying to pull out from his own sources. But in case of speculation, the funds are pooled based on the borrowed funds. Then income, if you see in case of investment, it's stable, but in case of speculation, it is uncertain and erratic, so it's unstable, we can say. Finally, in case of investment, the behavior of the participants are conservative and cautious. So they'll wait and watch and then invest accordingly. But in case of speculation, it's not like that. It's daring and carelessness can be seen. So there is so such type of market is highly susceptible to behavioral biases too. Now let's go to the differences between investment, speculation, and gambling. As it is really evident from this picture, the left side corner, we have the gambling, the right side top, we have the speculation, and the right side bottom, we have investment. So now in this particular slide, we're going to see what is basically the difference between investment, speculation, and gambling. So to state about it, so that is if you see, the basic difference between investment, speculation, and gambling is based on activities and instruments. In case of investment, it's distinct from gambling and it's somewhat different from the speculation too, in case of activities and instruments. But in case of speculation, you can see it's distinctive from gambling and not much from the investment. In case of gambling, if you see, it's distinctive from speculation and investment in larger terms. The time frame for gambling is usually short, but in case of speculation, is variable, and for the long term for investment. Risk, if you see, is very high in case of gambling. Similarly, it's very high in speculation, but it's comparatively lower in case of investment. depending upon the nature of assets where you are investing. Expected rate of return is usually negative and lower variability we can find in case of gambling, but in case of speculation, it's mixed and highly variable. And in case of investments, usually positive, somewhat variable, we can say. The role of chance is very high, of chance of winning or losing is very high in case of gambling. And in speculation, if you see, it's also high, but in case of investment, it's also high. Asset purchases is such purchase of assets is not happening in case of gambling, but sometimes it happens in speculation. Yes, it really happens in case of the investments too. Stake, if you see, there's no stake. If you see, there is more amount of stake in case of the gambling, in speculation too. But in case of investment, there are no stakes. Now, definitive events or outcomes of gambling is actually there, and speculation is also there. But in case of investment, it's not actually there. The outcome is not just seen. And finally, the economic utility. If you see the gambling, there is low economic utility. In case of speculation, it's mixed, either yes or no. And finally, in investment, you can have higher economic utility. Let's see who is investor, speculator, and gambler. So now here I'm going to differentiate these three concepts with the help of the definition given by William Sharpe. So Dr. William Sharpe, in his famous book, he has explained the differences between investing, speculating, and gambling. Investment is sacrifice of certain present value for possibly the uncertain future value. For example, like investment in arts, precious metals, equity stocks, derivatives, and so on. Speculate, if you see, the term that means to assume a business risk in hope of gain, especially to buy or sell in expectation for the profit from the market fluctuations. So, for example, a news event makes Bitcoin spike, but after a few days and the lack of news, okay, the Bitcoins collapse. So speculators wait for the next news event to come. Gamble is nothing but to bet on uncertain outcomes. For example, betting on a flip of a coin or the horse race and so on. In gambling, probability or the chance of occurrence is actually very high. Next, let's come to the basics. Now let's see the difference between an investor, speculator, and gambler. In case of the type of person, the investor is conservative, and you have conservative and it's institution-based. Most of them are money managers too. In case of speculator, the personality-wise, they're aggressive, they're hedge funds, and they use fast amount of money. Gambler, they are just a player and casino visitors too. If you see in case of investors, the analysis is fundamental analysis based. In case of speculator, it's technical analysis. But in case of gambler, it's based on the luck or the gut and the probabilities event. Then we have the next is risk. In case of investors, the risk is margin of safety or the dividend and valuations. Then in case of speculator, the risk is above average, leverage increases, okay, the risk of return. But in case of gambling, high amount of risk is there. In case of time, the investor tries to invest months to decades. In case of speculator, it's from minutes to months, but in case of gambler, it's quick result expected. Leverage, if you find the investor, there is no much leverage here normally. But in case of speculator, there is leverage, and gambler, there is no much leverage expected here. Next is the vehicle or the instruments being invested. Investor tries to invest in stocks, bonds, real estate, and so on. Speculator invests in stocks, options, futures, bitcoins, and so on. Lottery, casinos, Las Vegas. Then we have racetrack, online betting. Are there some examples through which the money is made from the gambling too? Finally, the collateral. In case of investors, yes, there is collateral security, and normally 50%. Speculator and gambling, no such collateral securities are, so due to which you can find there's low liquidity, and you cannot expect the safety and security can really happen in this particular features. So these are the important features for today. Okay, I hope it is very clear. Thank you. Have a nice day.